Do you want to know what the global pandemic and forced government shutdowns of our economy have done to the Las Vegas multifamily daily asking rental rate? Do you also want to understand what the overall impact has been with the global pandemic and government shutdown nationally for multifamily rental collections? Well, we're going to get into all this today and more on the Cash Flow Show. Hello, everybody, and thank you for joining me. I'm Paul Macaluso, President of Multifamily Investments at Simply Vegas Commercial. And in today's episode of the Cash Flow Show, we're going to go over some pretty detailed information regarding Las Vegas multifamily daily asking rates. We're going to discuss year-over-year rental growth for the Las Vegas multifamily market. We're also going to get into the collections nationally for multifamily rents. And I'm going to give you some opinions and forecasts on what I suspect we're going to see in the coming future regarding all of this. So without any further ado, let's go ahead and jump right on into today's information. Okay, on this first slide, what we have is the Las Vegas multifamily daily asking rental rate. We have 2018, 2019, and first quarter 2020. So we hit our peak daily asking rental rate for multifamily properties here in Las Vegas in March 16th, 2020. Now, by March 26th, which was the forced government shutdown that occurred, we've seen a decrease in 1%. So from March 16th, which was our peak at $1.20 per square foot, March 26th, when the announcement of the government shutdown and the closure of our economy took place, we saw a 1% decrease. Now, on March 30th, we had some people come out and forecast if we continue to see such a dramatic rate over such a short period of time, if that kept pace, we could see an overall decrease of 20% in our daily asking rental rates, which would have pushed us back more than 2 years back on what our daily asking rental rates are for multifamily properties here in Las Vegas. So overall, considering all things, global pandemic, forced shutdown of our economies, protesters and riots in the streets across the country, a decrease of 2% overall, because from March, our peak, to June 1, we've only seen a 2% decrease. That's not bad. So we did not see the forecasts come true on the rapid drop of daily asking rental rates, but obviously this is something that's still developing as time goes on, and we're going to continue to report on it and make sure that we keep our finger on the pulse to give you guys the most accurate information available out there regarding Las Vegas multifamily properties and the daily asking rents for this asset class. Okay, getting into our second chart here, what you see is the rent growth year over year for the Las Vegas market. There's three pieces of information on this. There's the year over year rental growth that we've experienced from 2017 to 2020, which is broken down by quarter. You'll also see the green line, which is the Las Vegas asking rents. And then the yellow line is the U.S. national asking rents for multifamily properties. So as you can see, we've seen a steady increase from 2017 to 2019 for our year-over-year rent growth. Now, actually in 2018, late 2018 and early 2019, Las Vegas was the highest rent growth metro in all of the United States. However, you'll note on this rental growth chart, which is the orange bars, that we have seen a dramatic decrease. Now, what is contributing to this dramatic decrease? Well, it's simple. We have had 6,500 new deliverables, all of which are A-plus properties, come into our market. These properties are charging significant amounts of rent. However, these developers were speculating on the substantial year-over-year rental growth, and I believe they've built too much of this product. Our city just cannot sustain all of this inventory for A-plus properties. There's not many people in this city to go around to fill this A-plus property type asset with asking rents of $1,400 for one-bedroom apartments. It's just not something that we see possible. I don't believe it's possible. Now, we have 3,300 more new deliverables that are going to hit the market within the next 12 months. That gets us to almost 10,000 new deliverables, almost all of which are A-plus properties within a 2-year span. Now, this is what is contributing to the decrease in the year-over-year rental growth. So let's go ahead and jump into our next chart, which is rent collections for multifamily properties nationally. Now, what you see here is a comparison from May of 2020 to May of 2019, the overall collections of rent for multifamily properties. So as you can see, we are only down about 3% on overall rental collections, which I think is not bad compared to comparing this time to last year. Considering everything that's taken place, the shutdown of economies, a global pandemic, riots in the streets, protesters, to see a minimal decrease of only 3% in collections is not bad. Now, what you'll see on the next chart, again, is a comparison between 2019 and 2020 rent collections for multifamily properties nationally. But what we're looking at is a 2-month span here. We have April and May comparisons for 2019 to 2020. So we've already covered 2020, which is about a 3% decrease. We had a little over a 4% decrease from April 2020 compared to April 2019, which again is not that bad, but we are seeing a positive uptick in the collections. Now, there's going to be an argument that's floating around out there that says the reason we've seen an increase between April and May is because of stimulus money that's been pumped into the markets and assistance that's been given to people that are out of work. And as we enter into June and July and the summer progresses into August, where people are expecting to see overall collections for multifamily properties continue to get tougher and tougher for management and landlords. I don't believe this is going to happen. I'm going to remain optimistic, but obviously this is something that we're going to keep a close eye on for you guys to make sure that you're getting the right information and understand what's actually going on. That's going to conclude today's episode of the Cash Flow Show. I want to thank you guys for hanging out with me and checking out this information. If you found it informative, please go ahead and hit that like button for me. And if you haven't already done so, please subscribe to our channel. It really helps us out. Thank you guys for tuning in again, and I'll see you in the next episode.